Hey guys, are you a Tesla shareholder or you are a NIO shareholder? If you invest in new energy vehicle stocks, today's video will definitely help you. I'm going to review the biggest challenger to Tesla and NIO in China, Li Auto. As one of the leading new energy vehicle brands in China, it is a noteworthy target. Even many industry insiders think it will be the next Tesla. So how do you think so? Do you think Li Auto will surpass Tesla? You can leave your comments after watching the video. As we all know, in this internet age, it seems that where there's talk, there's traffic and attention. And where there's traffic and attention, there's sales and money. Li Auto illustrates this very well. They're leaving traditional luxury brands and other newcomers in the dust, ranking second only to BYD.
As for the performance,
what an impressive performance you can see this year. But who could have imagined that it wouldn't have any advantage at all at the beginning? They actually started later than their bodies like NIO and Xiaopeng, and their financial muscle was also very weak. So how did they manage to catch up the outshine the competition without any initial advantage? Today, I'm gonna dive into the pros and cons of investing in Li Auto and spill all the tea you need to know about this brand. So, if you're curious about Li Auto, this video have got all the answers you're looking for. Stay tuned. Firstly, let's see how it wins the hearts of car lovers. Li Auto, with its obsession for big size, might just become the first new player in the auto industry to make it big. With their kick-ass L series models, it's undeniable that Li Auto has become the go-to luxury brand for families. When we talk about Li Auto, we can't ignore their ace in the hole, range-extending technology. Back in the early years of the rise of electronic vehicles, the industry has different opinions on pure electronic, plug-in hybrids, hydrogen fuel cells, and other tech routes. But there was one thing everyone agreed on: range-extending technology was outdated. However, fast forward to today, and you guess what? Range-extending tech is becoming a go-to choice for more and more new players in the automotive game. So why is that? Well, range-extending modes get to enjoy most all the advantages of pure electronic vehicles, while dodging the range anxiety that plagues traditional fuel-powered cars. As a front-runner in range-extending technology, Li Auto has been leading the pack since the end of the last year, leaving all the other newcomers in the dust. They owe their sales success to three key factors. First and foremost, they hit the jackpot by betting on range-extending technology from a user perspective. Li Auto's founder, Li Xiang, has emphasized the importance of user experience and user mindset. In his view, compared to pure electronic vehicles, range-extending electronic car can effectively address the main contradiction between safety and range. It's currently the most marketable new energy vehicle type. So, Li Auto's major sales success can be attributed to their focus on range anxiety and their user-oriented approach to making cars.
Do you think that's enough to impress consumers?
we did more than that.
Secondly, Li Auto nails it when it comes to perceived quality. Everything you can see and touch in an Li Auto is top-notch. It easily surpasses other similarly priced joint venture brands. And the moment you step inside, you will be blown away. Take a look at the feature list: air suspension, genuine leather, massaging seats, ventilated heating, a big-ass touch screen, and even a mini fridge. They're loaded up on nearly every feature you can find on the spec sheet, perfectly aligned with their online brand's competitive advantage. Compared with those overpriced joint venture models, Li Auto effortlessly upsizes without breaking a sweat. Unlike smart pure electronic vehicles, they don't have the cost of a massive battery pack or the need to develop range-boosting tech. Plus, they don't have to invest in advanced level autonomous driving features. Actually, their costs are lower than those of pure electronic vehicles. So all in all, when you combine range-extending technology with fully loaded features, ample space, a singular configuration, a strong brand image, and unbeatable value for money, it's safe to say that Li Auto hardly had any competition in today's market. It's a winning formula, my friends. So how's the investment in Li Auto shaping up, friends? Let's talk about their stock performance. With solid earnings backing them up, Li Auto stock is outperforming NIO and Xiaopeng by a wide margin. In the midterm to long term, although its second quarter deliveries online were impacted by capacity bottlenecks, they both agree that its deliveries are expected to continue to grow in the fourth quarter. What's more, let me tell you something, folks. Tesla's valuation isn't just about being an automaker. It's also got Elon Musk, the king of Twitter, adding to its media valuation. In today's era of smart cars, vehicles have become full-fledged data platform on wheels. The potential value of all the data is beyond measure. Li Auto, along with its founder, Li Xiang, has also owned King of Weibo, which brings it closer to Tesla's valuation. The future market cap has endless possibilities. So from my point of view, I think Li Auto has a very unique blend of media genes and involvement in complete vehicle manufacturing. It goes beyond the traditional definition of an automaker.
Does that mean Li is invincible?
As we all know that if someone wants to be the king of a field, in addition to being tough enough on its own, it also needs to beat its competitors. So now we talk about the competitors of Li Auto. Li was founded in July 2015, making it the youngest of the Wei Xiaoli trio. Now, originally, their focus wasn't on SUVs like their competitors NIO and Xiaopeng. No, they started off with something called SEVs, lightweight electronic vehicles designed for short city trips. In 2018, they even launched some SEV-related products in Europe. But here's the thing, SEVs were in a bit of gray area in China. So Li Auto eventually gave up on them and shifted their gears towards SUVs. Now, not only did Li Auto start later and take a detour, but the financial muscle was very weak, compared to NIO and Xiaopeng. In fact, back in 2018, they were in a real tight spot with their funds. Founder Li Xiang knocked on the door of over 100 investment firms, but got turned away. It wasn't until the recovery arrived in the form of Meituan's Wang Xin and TikTok's Zhang Yiming that Li Auto managed to overcome their financial hurdle. The Wei Xiaoli trio each had their own niche. NIO went for the high-end route, Xiaopeng focused on technology, and Li Auto aimed for practicality. You can see the difference in their charging technologies alone. NIO went for battery swapping, Xiaopeng embraced a high-voltage fast charging, while Li Auto chose to go to the end-range route. They managed to stand out in their own way. Looking back, it's funny how things turned out. Both NIO and Xiaopeng had their moments of glory, but now they're facing some challenges too. Meanwhile, Li Auto, who initially seemed like the underdog with less technical skills, is actually cruising along smoothly and showing the most promising growth. Maybe that practicality route they took had some hidden potential after all. In conclusion, Li Auto, rooted in reality, is unlikely to perform poorly. When it comes to the car companies, marketing is where the real competition lies. These days, car companies are more likely marketing powerhouse than anything else. And in the consumer market, marketing becomes a top priority. So how does Li Auto tackle marketing? First of all, forgot about those traditional spokesperson-heavy commercials. That's a risky move for car companies. And that's where Li Auto shines by occupying the public discourse through the massive arm of KOLs, key opinion leaders in the social media era. In the age of Weibo and TikTok, the rise of social media platforms, the future of the traditional advertising industry is uncertain at best. But Li Auto, born from the internet with a team of founders who understand the game. They excel in utilizing and understanding social media way better than their peers. Just look at Li Xiang, Li Auto's founder. In less than a year, he posted nearly 12,000 Weibo posts. That more than News Li Bing with 377 posts and Xiaopeng He Xiaopeng with 1,477 posts. So it's hard to see that Li Auto sells with no relationship with its founder's posts. So what I want to see here is media is power. Now here's a mind-blowing stat for you. Out of 6,245 influencers Li Auto partnered with in the past months, a whopping 27% of them were bloggers specializing in car introduction, car modification, and car lifestyle. In the realm of electronic vehicle, we can find that Tesla has roped in all the car manufacturers into its own set of rules and standards. So whenever other brands make a move, they can't escape the shadow of Tesla. Similarly, in the 300,000 and 500 IMB car market, Li Auto has dragged its competitors into his own game and race. Many new energy vehicle companies, especially the emerging forces in the car manufacturing industry, are hesitant, confused, and under immense pressure. They're stuck in the middle, swinging back and forth. One moment, they're benchmarking themselves against Tesla, and the next, they're trying to keep up with Li Auto. Meanwhile, Li Auto sits high and mighty, watching all these replicas elevate its own position. There's a fundamental rule in cognitive science. When you argue against your opponent using their own tactics, it's not only ineffective but also reinforces their presence. That's why founder Li Xiang strategically stirred the pot and gathering enemies. He wants to draw other emerging forces into his own narrative on the battlefield of public opinion. Li Xiang is truly a smart cookie. While almost everyone else was squaring off against Tesla, he kept his distance and focused on building his own car empire. Now let's dive into the world of Li Auto and try to figure out why they're not jumping on the international bandwagon like their competitors BYD, Xiaopeng, and NIO. So here's the deal. In the first 2 weeks of this month, Li Auto noticed a difference of over 200 vehicles between their deliveries and insurance registrations. After thorough investigation, they discovered that some sneaky individuals privately asked for over 200 Li Autos to places like Central Asia and the Middle East. But Li Xiang also made it clear that Li Auto won't be venturing into overseas market before 2025. Right now, all their resources are going to be focused on achieving their 2025 goals. And even if they do go international, they will stick to the direct sales model. They announced that they prefer the mode of no middleman or no dealerships for these guys. Now let's take a peek at the comment section. Some netizens are saying that if Li Xiang's L9, which sells for around 110,000 RMB domestically, was shipped abroad, it could fetch a whopping 680,000 RMB. That's some serious profit potential right there. According to Li Xiang himself, the production capacity at their Changzhou factory climbed to 8,000 vehicles per week last week. And from next week on, they're aiming to maintain that number, with last week's sales hitting around 7,700 vehicles. It seems like they are keeping up with demand. They're selling what they can produce, There's more. Li Auto still have a lot of small goals to conquer. Next up, they want to surpass 20,000 monthly deliveries of their L8 and L9 models. They're aiming for record-breaking L7 deliveries. They already swamped with demand in the domestic market. So it's safe to see that venturing into overseas market might make things even more hectic. Li Xiang believed that the year 2023 to 2025 are crucial for Li Auto's growth from stage 1 to 10. Their top priority is to boost annual deliveries to a whopping 1.6 million vehicles. Hey friend, do you remember a couple of years ago when Tesla were in such high demand that it felt like finding a needle in a haystack? Yeah, those were the days. Tesla's annual production capacity was around 930,000 vehicles. Now, let's assume Li Auto maintains a steady production capacity of 8,000 vehicles per week. That would be less than 400,000 vehicles per year. If they rush into the international market, they might face some serious skepticism from overseas customers. As a leading player in the domestic new energy vehicle scene, Li Auto is producing and selling almost everything they make each month. They're pretty busy as it is, so before they rush into international waters, it might be wiser for them to concentrate their resources on perfecting their product and establish a strong presence in the electronic vehicle market. And let's not forget, going overseas isn't just about shipping cars abroad. They need to localize their vehicle system and conduct a thorough market research to figure out which countries are the best fit for Li Auto. And now let's move into the prospects of Li. Alright peeps, listen up. Picture this. It is 2025 and Li Auto Models is cooking up some serious plans, bigger than expanding overseas. We back at the first ever Li Auto Family Tech Day. These guys were already dishing out a series of grand vision. They're gonna invest a ton of money in power battery material, structure, thermal management, and most importantly, charging networks. What's more, they're planning to have 300 plus supercharging stations up and running by the end of 2023. And guess what? They're aiming to build up 3,000 supercharging stations by 2025, reducing the average distance between each station to mere 1 kilometer. So folks, you have already got what you want to know about the Li, the challenges, and the opportunity. Let's be pretty for Li Auto. Very good investing targets.